What's up YouTube, it's your boy OMG Pips back again with another video. And today we're going to be looking at very effective risk management strategy that can be applied to platform accounts to ensure that you survive those drawdown periods, to ensure that you stay long enough in the game to realize profits, to ensure that the game is in your hands. All right, so this strategy this plan is best suited for platform accounts but can be applied to personal funds as well. It just depends on the individual trader. What are your goals? What are you looking for? And all that. But without much further ado, without talking a lot, let's get right into it. This is our risk management plan. The first thing we have is our assumptions. So these assumptions are derived by thorough backtesting done over a long period of time. You cannot get these results without having backtested your trading strategy. So in order for you to know what the win rate of your strategy is, you have to backtest it. In order for you to know what the average risk to reward is for your trading strategy, you have to backtest it. In order for you to understand what a reasonable weekly target is, you have to backtest your trading strategy. These results are derived through backtesting. So this is our risk management plan. In this video, we're going to use these same results that I collected. Let's say the win rate of our trading strategy is 60%, meaning out of 100 trades, 60 trades are going to be winners and 40 trades are going to be losers. So our win rate is 60%. Risk to reward ratio per trade is 1:5, meaning we don't take trades with a risk to reward that is lower than 1:5. If the risk to reward is lower than 1:5, we do not take that trade. The weekly target for our account is 8%. So each and every week we're going to target 8% profit, and the starting balance is $10,000. Don't just watch this for entertainment. Make sure to take notes, make sure to understand what is being taught, make sure to learn, make sure to digest, make sure to reflect, make sure to implement. That is how you grow, that is how you learn, that is how you become better. All right, so the key concepts: our risk per trade is going to be the amount of capital that we are willing to risk each and every trade. So each and every trade, we are going to have a specific amount of percentage of our capital that we are willing to risk. Meaning if we lose on that trade, we are fine or we are okay, and that loss has no emotional impact on our psyche or on our activity or on our trading, right? That is the role of risk per trade. That is, you determine that by deciding how much you are willing to lose without it affecting your emotional balance, without it affecting your trading activity, without it affecting your actions, because emotions in trading are the number one cause of unprofitability. If you want to be unprofitable, trade with emotions. All right. Position sizing, determining the size of each trade based on risk per trade, same as risk per trade. Drawdown management, so we're going to have strategies in place to limit the amount of losses we can incur each and every week. We're going to have rules in place to limit the amount of losses we can take within a given period. So drawdown management is very important to ensure that we do not blow our accounts, to ensure that our trading account is safe and secure. That is the role of the drawdown management. Performance review. This basically means assessing the performance and making necessary adjustments, meaning we are reviewing our performance in the markets. We are reviewing our performance with our trading plan. We are reviewing our performance in executing our risk management plan. All right. Risk per trade. Our risk per trade is going to be 1% of the allocated capital. So meaning each and every trade we're going to risk 1%. With an initial capital of $10,000, this means that we're going to be risking $100 each and every trade, because $100 is the equivalent of 1% of $10,000. Is that making sense? Make sure to hit that like button, hit subscribe, so that you can follow along when I drop new content and you can learn you something. Alright? Calculate position size based on the risk per trade and stop loss distance. For example, if the stop loss is 10 pips, you are risking $100. You will trade a size that equates to $10 per pip movement. Trade execution, self-explanatory. Aim for trades with the reward of 5 times the risk. If we are risking $100, we are aiming to earn $500 per trade. So if we are putting down $100 per trade, we want to make, or we are looking to make, $500 each and every trade. With a 60% win rate and we expect 6 winning trades out of 10, our profit is $3,000. 4 losing trades out of 10 trades is going to result in a $400 loss. The 6 winning trades minus the 4 losing trades, $3,000 minus $400 is equals to $2,600. So this is what we are going to make with this risk management plan. So each and every 10 trades we are looking to make at least 26%. Do you see the clarity that comes when you are organized, when you know what you're doing, when you know what you're looking for? Randomness is the #1 route to being a loser, or to being part of the 99% in this market. Avoid randomness at all costs. Stick to your plan. We need to have goals, because without goals we do not know where we're going, and goals allow us to aim, goals allow us to target, goals allow us to see where, or to see what we want to achieve and to achieve it. Our weekly goals: to achieve an 8% profit per week on a $10,000 account, we are looking to make $800. That is 8% profit, which is very enough. Do you know how many people would give their right arm just to earn an 8% profit per week on their capital? With the strategy outlined, you would need roughly 1.6 winning trades per week to reach the target, $800. So given the win rate of 60%, you need approximately 2.5, or let's just round this number up to 3 trades per week. So given the win rate, you need approximately 3 trades per week to ensure you hit the target with a reasonable buffer. Or if you don't hit your goal, it is going to ensure that your drawdown is not significant and you're able to stay in the game longer. Alright, live to trade another day. That is the name of the game. Alright, so let's say you're losing, let's say you're in drawdown. So everything you see here is within the risk management plan. You have to have everything you see here in your risk management plan. So drawdown management: implement a maximum drawdown limit. So you have to have a limit of how much drawdown you're able to endure, or how much drawdown you're able to sustain. When you reach the drawdown limit, when you reach that amount of percentage, when you reach that percentage, you are to stop trading and review your strategy. Review what is going wrong, review what you are not doing right. Turn off your emotions. Be mechanical. Alright, and all that is done by reviewing our performance, meaning weekly review to assess performance and make necessary adjustments. Each and every week we have to review our plans, we have to review our targets, we have to review our goals We have to review our performance to see how we are performing, to see where we are going, to see how much we need to adjust. Ensure that the strategy is aligned with the firm's rules and risk management protocols. So ensure that you are not breaking any rules. Ensure that you are sticking to the prop firm trading rules. Summary: make sure you only risk 1%. This keeps the losses manageable and allows for recovery. So when you're in drawdown, you're able to come back to break even and eventually hit that target profit. High risk to reward ratio. With a 5-to-1 risk to reward ratio, a few successful trades can significantly impact the account positively. So make sure you implement that risk to reward. Always aim for a 1 to 5, always aim for a 5%, and always review and adjust your performance. Regular assessments to ensure the strategy is working as planned and make necessary adjustments. It's your boy OMG Pips. Make sure to hit that like button, subscribe, and turn on post notifications so you're notified each time I drop a new video. And may God the Almighty be upon you all in Jesus Christ's name. Amen.
And remember, in Forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.